But ultimately, Bitcoin, I believe, becomes digital gold, becomes a digital version of gold and sound money going forward. So the next 5,000 years, my guess is we migrate from physical gold to digital gold. But there's still only one money, which is this asset that exists in the absence of a liability. So central banks will hold these money assets, gold, ultimately, and Bitcoin, and then they'll build the credit system on top of that. And to your point, if you just think about mean reversion, the credit creation and the financialization in the bricks as they mature.
Mark Yusko is an investor, hedge fund manager, and Bitcoin supporter. He is well known for co-founding Morgan Creek Capital Management, an investment management firm. Even though Bitcoin and many other cryptocurrencies have seen a drop in value, investors remain cautious about whether investing in Bitcoin is still worth it. Despite making gains at the start of 2023, Bitcoin is still trading in the shadow of the 2021 bull run, a factor that can presumably affect its supply. Bitcoin is young and unproven as an investment, but cryptocurrency speculators are using it to store value and hedge against corrections and recessions. Bitcoin is rare compared to other cryptocurrencies, and gold is rare compared to other metals. Bitcoin is much more volatile than gold, making it a riskier investment than gold. However, new data indicates that the extended bear market has not significantly impacted Bitcoin's supply. With almost half of all of Bitcoin remaining unmoved, it can be interpreted in several ways, such as the asset-building momentum toward becoming digital gold and, consequently, a store of value. Mark Yusko says that Bitcoin could be in the midst of shifting its trend as it gears up for the 2024 halving. He also believes that Bitcoin is inching closer toward a new bull market based on the halving cycle. The halving, which slashes the rewards issued to Bitcoin miners by half, is slated to take place in March 2024. The hedge fund veteran says that the event guarantees that the price of the flagship crypto asset will increase. Yusko also explains why he thinks Bitcoin is one of the most important plays that an investor can make.
Cryptography is really important because it allows the creation of unique assets in the digital world. And that's a really, really, really important thing. So what Satoshi Nakamoto gave us, whoever he, she, they are, yes, Bitcoin's wonderful and amazing and very important, but it's more than that. It's the ability to create a unique asset in the digital ecosystem. And what does that mean? Well, again, record albums. Grew up playing record albums, physical, analog devices, black vinyl disc, you put it on a turntable, spun around, made music. Well, then they're like, well, but I could record that electronically and call it an MP3 file. And then I could copy paste, send you a copy, and you could listen to a song, I could listen to a song, and we were both happy. But the music industry was very unhappy because they wanted you to buy your own song and me to buy my own song. So what did they do? They shut down Napster and they shut down any way of copying music. And now what do? We all stream digitally, uniquely identified through cryptography, and we all have to pay, which is the way it should be. And more importantly, because we know when a streaming service plays a song, the artist actually gets paid instead of, it going off into the ether. So the ability to have digital assets and beyond music, stocks, bonds, currencies, commodities, art, real estate, private businesses, once everything is on a blockchain, and the blockchain is just simply an open public ledger. But once it's cryptographically secure in a line item, which is what a token is. A token is not a thing. It's not a little piece of gold. A token is a line item in a ledger that is cryptographically secure and says who owns what.
Bitcoin makes up the overwhelming majority of the value in the entire cryptocurrency asset class. For this reason, most other cryptocurrencies are actually correlated to Bitcoin's price. As Bitcoin goes, so does the rest of the market. Rather than trying to find some obscure cryptocurrency that might beat Bitcoin in the near term but eventually fail, the safer and simpler route is to invest in Bitcoin and hold for the long run. Bitcoin is now not only being acquired by retail investors like you and me, but also by publicly traded companies, billionaires, and even the governments of countries. As this trend of increased demand grows to the benefit of investors, Bitcoin's limited supply will be put under more pressure and its price should subsequently rise in the future. So rather than trying to find the next meme coin, just keep it simple, buy Bitcoin, hold, and get back to work. They leverage cryptography to make sure that all transactions are validated and securely stored within this ledger. Another interesting concept is crypto gifting cards are set to revolutionize the way people give gifts. They offer a unique opportunity for those giving presents to have their recipients experience something completely new.
I own a Bitcoin, you own a Bitcoin, I own a piece of property, you own a piece of property. All of that is nicely laid out in this public ledger, and we have truth. And what's cool about truth is it replaces the need for trust. In the old days, the last 800 years, we had to rely on trust. Trusted third parties, banks, insurance companies, brokerage firms. And like I right now have to trust that my money that sits at Bank of America is actually there and they didn't take it. Right? Because it's my word against theirs. I actually have a nightmare, Francis, that I go to the ATM and I punch in my code and it says 0. Like, how would I prove it's not 0? I don't have a statement. I haven't had a statement for years. And it's literally their word against mine. And so I have to trust them. Well, if I have a Bitcoin on a hard drive or on a cold storage device, I don't have to trust anybody. I have truth. I have an entry on a ledger that says Mark owns that Bitcoin. That is frightening for the powers that be because they like being the trusted third parties, right? Bank of America likes the fact that they can tell me, oh, I'm sorry, you can only transfer $25,000 out of your bank account. What do you?
Yep, custodianship. That one in the whole.
And it's like, no, I'm sorry, that's the daily limit. That's all you can take. Like, that's unbelievable to me. It's supposedly my money, but it's not. It's the bank's money. I have an IOU, and I trust that they'll make good on that IOU. But in this new world of cryptographically secure assets on blockchains, don't need that. And that is extremely frightening.
Cryptocurrencies are secured through the use of cryptography and distributed ledger technology. It is not driving up crypto prices so that you can dump your tokens on someone else. Digital assets need to trade, so centralized venues or decentralized exchange protocols are necessary, but trading markets are not the ultimate point. Nor is the point of crypto to lend your crypto assets so that other people can trade them, although lending markets in which everyone is aware of the risks are not inherently problematic. Many investors expect the U.S. Federal Reserve to hike its benchmark rates by 0.25% this week, the smallest rise since their tightening cycle began last year. This could signal positive momentum on the macro front for assets such as Bitcoin. Without cryptography, all the data would be available to anyone with the means to extract it and use it for their own purposes.
Singapore and Dubai as being new money centers. What's interesting about money, right? There's only one money in the world. Only one. And I could argue now there's about to be a second, but gold is money. It's the only money. And money is an asset that exists in the absence of a liability. Everything else is credit. And credit and currencies exist in every country, right? And, in America, we have green pieces of paper, and in China, they have red pieces of paper. In Israel, they have yellow pieces of paper, but they're just pieces of paper. And ultimately, they're all backed in some way, shape, or form by gold at central banks or other currencies held by central banks divesting. And that divesting is going to be about $1 trillion a year for the next 20 years, $1 trillion. And that'll go from stocks to bonds. Because again, when you're in your 70s, you hope you have a good long life still, could live another 30 years, but you favor liquidity over growth. And so that's probably going to continue to put pressure on interest rates globally in the West. And it's going to continue to make the governments able to overspend and issue massive amounts of bonds. So ultimately, your analysis of market cap per person is really, really important in that over time, individuals move up the value chain. And as they move up the value chain, they have very repeatable patterns of consumption.
Digital asset investment products, often favored by institutional investors, saw inflows of over $117 million last week, the biggest weekly increase since last July, according to data from asset manager CoinShares. Bitcoin was far and away the biggest draw, with funds tracking it responsible for $116 million of that. Crypto funds' total assets under management have risen to $28 billion, up 43% from lows plumbed in November as the collapse of the FTX exchange sent shockwaves through the industry. Once the fog of uncertainty lifts, strong macroeconomic fundamentals will underpin the return of global capital flows to U.S. What are your thoughts on Mark Yusko's judgment about cryptography and cryptocurrency and its impact on blockchain? You expect that Bitcoin to perform as digital gold? Let us know in the comment section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.